Yo, what's going on, guys? Good evening. How the heck are you? How the heck are you? Good little evening here for Bitcoin. Let's have a look. All right. So classic textbook double bottom we got going on here, guys. That's what you want to see. Probably going to be a few days down at this level before we start to work our way, probably to this, before working our way up. Like I said, my breakout target for a double bottom is going to be this resistance level right here at about $110,500. We will probably reject off of that level and then have to consolidate somewhere in this range, right? Between like 108 and 110K for your consolidation level. As you can see, there's a lot of liquidity in that area here, right? So you're probably going to get stuck right here after the breakout to build more strength to continue up. So that's what I'm watching. So looks good, guys. Looks healthy. I'm feeling good. I'm feeling bullish. I'm so excited. All right, let's get into the chat. 0 super chats to start the stream. WF Capital, where you been all my life, man? What's going on? Good to see you, brother. Good to see you. Babes, what's up, my dude? Good to see you, brother. Guys, make sure you hit the like and subscribe. We got 82 people here. We got 51 likes. Wow, that's a really good ratio. Let's get to 100, guys. Let's get it. Pete, what's up, man? Santa brings us the alpha. There you go. How long do I think until we see Bitcoin climb to 140K? Probably. Could be December. Could be December. Santa Rally, right? Maybe Santa Rally. Funky, what's up, buddy? I am Jasmine, but that being said, let's go Zebek. Absolutely. GN says, please hit the like and subscribe. Absolutely. Quentin, what's up, buddy? Good to see you, man. Anthony's in the house. Come on, Zebek, rise now. Benjamin, I think my real job and wife are actually starting to miss me. I told them I'm going to get some cheddar a couple of months ago and haven't returned. Let's get some cheddar, yo. Ray, what's happening, man? Let's get it. Smash the likes. Yes, absolutely. Dave, what's up, man? Good to see you, buddy. Good to see you. Ty, what's happening, man? Just did a push day at the gym. Nice. There you go. There you go. Curls for the girls, buddy. Curls for the girls. Get it. Crush it. Hoover, what's happening, man? Good to see you. Carlos, what's the haps here? Well played, sir. Well played. All right. Well, we're caught up in the chat already. Let's get into the news. Let's see what's going on. See what's happening out there in crypto space. Jasmine's hit the bottom. It's time to load the bags. There you go, man. Jan says, I'm so scared and nervous about the about so much that crypto that I had to make 2 holes in my belt from being stressed not eating. There you go. Losing weight, feeling great. Absolutely. All right, so altcoin season index surges, exciting 2-point jump signals potential market shift. Have you been watching the cryptocurrency market lately? The altcoin season index just made an exciting move, climbing 2 points to reach 28. This subtle shift could signal the beginning of something bigger for alternative cryptocurrencies. Let's explore what this means for your investment strategy and why savvy crypto enthusiasts are paying close attention. The altcoin season index serves as our crypto market thermometer. CoinMarketCap calculates this crucial indicator by comparing the performance of the top 100 cryptocurrencies against Bitcoin over 90 days. However, they exclude stablecoins and wrapped coins from this calculation. That result gives us a clear picture of market sentiment and potential investment opportunities. Think of the altcoin season index as a scoreboard showing which team is winning, Bitcoin or the altcoins. When the index reads closer to 100, we're in full altcoin season territory. Conversely, lower numbers indicate Bitcoin dominance. The recent jump to 28 suggests we might be seeing early signs of an altcoin momentum building. While 28 might seem modest, this 2-point gain represents meaningful movement in crypto markets. The altcoin season index movements tell us that more altcoins are starting to outperform Bitcoin. This gradual shift often precedes more significant market changes that can impact your portfolio. Consider these key aspects of the current altcoin season index reading. Threshold indicators, we need 75% of the top altcoins beating Bitcoin to declare a true altcoin season. Early warning systems, small increases often signal changing investor sentiment. Portfolio guidance helps determine whether a focus on Bitcoin or diversify into altcoins. And market timing provides clues about when to adjust your investment strategy. Smart investors don't just watch the altcoin season index, they use it. This tool becomes particularly valuable when you understand the practical applications. The current reading of 28 suggests we're in a transitional phase where careful observation pays dividends. When the altcoin season index trends upward, it often indicates growing confidence in alternative cryptocurrencies. However, remember that we're still far from 75% threshold that defines a true altcoin season. This means you have time to research potential opportunities before any major market moves. The The journey from 28 to potential altcoin season territory requires sustained momentum. Historical patterns show that once the altcoin season index begins climbing, it can accelerate quickly. However, market conditions can change rapidly, so continuous monitoring remains essential. What do I tell you guys? You must be paying attention on a daily basis, not just to charts, but what is also happening in the macroeconomic scheme of things. Keep these factors in mind when you watch the altcoin season index evolve. Market cycles. Crypto markets move in predictable patterns. Bitcoin performance still drives overall market sentiment. External factors like regulatory news and global economic impacts all cryptocurrencies, and technical analysis combine the index with other indicators for best results. The altcoin season index movement to 28 represents more than just a number. It reflects shifting market dynamics that could shape your investment decisions. While you're not in a full altcoin season yet, the upward trend warrants attention and preparation. The most successful crypto investors use tools like the altcoin season index to stay ahead of market curves and make informed decisions. Remember that cryptocurrency investing carries risks and no single indicator guarantees success. However, understanding tools like the altcoin season index helps you to navigate these volatile markets with greater confidence and strategic insight. Big things popping, little things stopping. Jetpack, what's up, buddy? Peace to the people. Salute to the future. Thank you, Rob. Hey, I got you, brother. I got you. Did I hear a dryer turn on? Maybe. Restful Mind, what's happening? Good to see you. Good to see you. Jasmine Army, I've just got us 10 more new holders. They've loaded up. Let's hear our holders. Absolutely. Hey, there you go, man. Boom. Let's get to 100K. If you ain't buying, you're crying. Matt's in the house. Jasmine is the best. I bought 300,000 more Jasmine coins today. Nice. There you go. I see that as a win, my friend. I see that as a win. Keep moving forward, says Miria. Has so much ROI from these low levels. It's crazy. Do you see it not reaching the bigger targets because it's gone? No, I don't. No, I do not. That is not a factor for me. Altcoin in the house. Chris, it just hit nice. It hit 30. There you go. Bada boom, bada bing. There you go. A signal just came out from Rob when he said BTC may reject at 110,500 and consolidate at 108. Every time he said those words, it goes parabolic. Hey Rob, Alfredo, what's up, buddy? Good to see you, man. Pico to the moon, let's go. Topsy, Rob's dryer coin up 1,000%. Absolutely, guys. Do not miss the dryer coin. Man, Miria will do me wonders. Can I get an amen? There she is, the one and only Gamma Goddess. Let's get this money. That's his mistake all the time. Do you think government opening is priced in? No, I don't. Miria is just such a good buy. Been staking like crazy. Absolutely. CPI, I think it's going to be bullish for crypto. I think it's going to be bullish. I do. I think it's going to increase. I actually have a video coming out later tonight. I already recorded talking about that very thing. I think that CPI is going to come in, raising the chances of a rate cut in December. That's what I think. All right, what else do we have? Shift in Bitcoin's 4-year cycle. Bitcoin's traditional 4-year cycle appears broken, as analysts highlight shifting market dynamics and increased cycle length due to macroeconomic forces and institutional behavior. The cycle shift impacts Bitcoin's market timing and price predictions, with reduced alignment to halving events and ripple effects seen in Ethereum and major altcoins. Recent commentary highlights that Bitcoin's traditional 4-year cycle is shifting as supported by on-chain data. Experts believe the cycle has elongated or possibly broken, with macroeconomic forces playing a significant role. Cryptocurrency analysts, including Jess Eckel and On-Chain Mind, suggest macro liquidity and institutional behavior are changing the cycle, emphasizing that prior reliance on the halving as a cycle driver is outdated. Have a good night, Kane. I will see you tomorrow, man. The shift in the cycle impacts Bitcoin and related assets. Ripple effects are seen across cryptocurrencies. Traditional capital flow narratives indicate changes as other cryptos like Ethereum show resilience against cycle synchronized pattern. On-chain cycle models indicate an increase in cycle length. So is this cycle expanding? It seems like it is. It seems like at this point we may have the top of this cycle sometime in 2026. Absolutely mind-boggling. Beebs, I thought they weren't releasing CPI numbers tomorrow. Well, I mean, no matter what happens, we'll get some kind of numbers. We will get some sort of projections no matter what, right? And the market will respond as a result. So that's what I think about. That's all I have to say about that. Speaking of the government shutdown, let's talk about it. Government shutdown averted. House passes crucial bill to keep America running. Breaking news, the U.S. House of Representatives has taken decisive action to prevent a catastrophic government shutdown. This crucial development comes as lawmakers passed emergency legislation to keep federal operations running smoothly. For cryptocurrency investors, the financial markets, this resolution brings much-needed stability and clarity. The House moved swiftly to address the looming government shutdown threat. Representatives approved the bill with bipartisan support, demonstrating the urgency of maintaining government operations. This action prevents what could have been a devastating disruption to federal services and economic stability. President Trump is committed to signing the legislation immediately. The White House confirmed the signing ceremony will occur at 2:45 a.m. UTC, underscoring the time-sensitive nature of this resolution. The government shutdown creates significant uncertainty across all financial markets, including cryptocurrencies. Here's how this resolution benefits the crypto space. Market stability prevents volatility from political uncertainty. Regulatory clarity ensures ongoing oversight and framework development. Economic confidence maintains investor trust in the broader financial system, and continuous operations allows government agencies to continue their work. The avoidance of the government shutdown means regulatory bodies like the SEC and CFTC can continue their important work on cryptocurrency frameworks without interruption. Can we really call it a government shutdown avoidance? Because they didn't avoid being shut down. They've been shut down for 2 months? They're coming back from being shut down. They didn't avoid being shut down, right? Political stability directly influences cryptocurrency performance. When the government faces potential shutdowns, investors typically seek safer assets. However, with the legislation passing, we can expect reduced market uncertainty, continued regulatory progress, stable economic conditions, and normal trading patterns. The timely resolution of this potential government shutdown demonstrates effective governance, which positively impacts all financial sectors. With the immediate crisis averted, attention turns to long-term solutions. The successful passage of this bill shows that lawmakers can work together to prevent government shutdown scenarios. This creates a more predictable environment for cryptocurrency development and investment. Moreover, the quick action suggests the future potential government shutdown threats might be handled with similar efficiency, reduced long-term market concerns. Very, very nice. But they did not avoid a government shutdown. Yeah, exactly, Beebs. They've been shut down. They didn't avoid being shut down. The gap between higher and lower income spending growth continues.
America Institute has released the consumer checkpoint for November. Debit and credit spending saw its strongest gain since early 2024 at 2.4%. Joining us right now to break it all down is Bank of America Institute's Liz Everett-Chrisberg. And Liz, thanks for coming in this morning.
Of course.
Just to remind people, this is coming from information on how many different accounts. We're missing government data right now, but in a lot of ways, you've got a broader data set than what the government would tell us anyway.
We do. We're getting information from nearly 70 million consumer and small business clients. So just a small sample. And I think the other thing that I always like to remind people is we're not surveying people to ask them what they think they're doing.
Right,
we're telling you what they're actually doing.
So you saw consumer spending climbing pretty steadily. What's that tell you? Up 2.4%.
So up 2.4%. And as you said, that's the strongest in almost 2 years and 20 months. If we look at it seasonally adjusted, it was up for the 5th month in a row. So you are continuing to see consumer spending power. But I pull out two things on this. First, while retail spending did go up, the number of transactions didn't. So one of the things driving that strength in the consumer spending number is inflation, it's maybe tariffs. It's not that consumption is necessarily increasing. And then the other thing that I pull out is it's the higher income households that are really driving the spending. That gap between spending growth between higher and lower income households is certainly continuing.
At the lower end, what are you seeing?
So the lower end spending is still growing. So if you look at lower income spending, last month it was up 0.7. Higher income spending, though, was up, almost 4 times that at 2.7. What's interesting is, though, what the gaps are in terms of what the difference between the spending growth between the higher and the lower income consumer, and where we're seeing the biggest gaps are in bigger ticket items, in airlines, in lodging, in furniture. To a lesser extent, we're also seeing it in clothing. But in each of those categories, it's not that the higher income is really spending a lot more. It's that lower income is pulling back. So
a lot of those are discretionary items.
A lot of them are discretionary items. And then the other thing that's interesting to look at is where are we not seeing a big gap between the higher and the lower income spending? It's in general merchandise, it's in online retail. And the one category where we're actually seeing lower income go up and higher income pull back is in groceries. Now, when I first saw that, my first inclination was, okay, this is an impact of SNAP benefits because people are putting more groceries on their card. But this data is only through the end of October, so it wouldn't necessarily have that impact. What we think is driving that differential is that lower income consumers are already purchasing the value items, whereas higher income consumers have the ability to pull back a bit. So you're seeing on the grocery side them pull back to go to more value.
If you listen to some of the fast casual dining restaurants, they've seen a pullback in the consumer there. Does that mean maybe those income people are spending more at the grocery store and less?
We haven't seen that. And actually, in our data, we're seeing both higher and lower income consumers spend more at restaurants. So that doesn't necessarily tie in. But I do think that we are seeing evidence, particularly at the lower end, that those consumers are under a bit more stress. And some of it always comes, and I say this all the time, a lot of it always comes back to the labor market. And what we're seeing in the labor market is still expanding according to our data. And we look at the number of households receiving income, that was up 0.5 last month. So the labor market is still expanding, but the wages that the lower income consumers are pulling in are growing at a much slower rate than at the higher income consumer. And in fact, that disparity between wage growth is at the largest level between higher and lower that we've seen since we started the series in 2016.
What does this portend for the holiday shopping season?
So holiday shopping, here's the good news. I know, a lot of kids out there are trying to figure out what's good and bad. So far, it's early. We're seeing holiday spending is up 5.7% through October. So again,
How do you even measure holiday spending?
We've got a basket of goods that are kind of holiday related, where more than 20% of the sales come through the holiday season. So that's what we're tracking there. But again, what we're seeing, even though spending is up, people are paying more and getting less. So in terms of transactions. So, I know my dad's been waiting for me to say this. Good news is, we're spending more. Bad news, fewer presents under the tree, but less wrapping paper to clean up.
That's how they measure the spending in the holidays. Eggnog. Eggnog sales. Good times. Good times. What else do we have? We get another short one here over on Squawk Box. Former Fed Vice Chair says there's a lot of like about the U.S. economy. That doesn't make any sense. All right, rates.
Guest is going to give us his insights on the economy, the Fed's rate path, and so much more. Joining us at the table, PIMCO's global economic advisor, Richard Clarida. He's former Fed Vice Chairman. Good morning to you. Normally I'd say, what do you think of the data? But we don't really have data, or maybe we do. What data are you looking at right now, actually?
You know, you get things like ADP on the labor market. There's something up in Boston that scrapes prices from Amazon. So you're getting some numbers, but it's obviously not the gold standard, which is the government data, which I assume we're going to start getting pretty soon.
So what do you think is actually happening here under the covers?
I think the labor market's been slowing all year. The challenge for Powell and the committee is it slowing because of demand for labor, or is it slowing because of supply of labor, immigration enforcement?
And what do you think the answer is?
Well, I think as of September, they've judged that it's really sort of a demand story, which is why they cut rates in September, at least on a risk management consideration. I think there's some evidence there, Andrew. You've seen some slowdown, for example, in wage inflation, but it's a murky picture at best.
You know, we just had Lisa Su sitting at the table where you are, and AI is a big question mark about employment. Do you think that's having any measurable impact yet?
Anecdotally, it does appear. In particular, you see, for example, employment for entry-level coders is way down. I do think it's too soon to tell, but probably we're moving in that direction. The question is, you know, the pace that we see and what sectors are impacted.
Okay, so we have the employment picture on one side of the aisle. We have the inflation picture on the other side of the aisle.
Yeah.
You know, if you were to talk to Scott Besson, he would say, look, inflation is decelerating, and it is. But there are pockets within the economy where you have inflation increasing.
Yeah.
And so if you were sitting back in your old seat, what do you tell Jay Powell about that?
Well, inflation, I think, is basically treading water. If you look at the Fed's preferred measure, it's running at around 2.8 or 2.9, and that's where it was 2 years ago. I think the Fed could make a case that but for the tariffs, it would be lower. But inflation's not falling, and it's been above target now going on 6 years. And so the point I'd be making that I'm making now is there's a risk to the labor market. There's also a risk that inflation is too high, and it may take a while to get it down.
But this puts you in a stuck position. Because, you know, if you're going to lower interest rates, you're going to make the inflation picture worse.
Yeah.
Maybe make the employment picture better.
Yeah.
And if you raise interest rates, you're going to do the opposite.
That's right.
It's the blunt instrument. So what do you do?
Well, I think it's a judgment call, and I think that's why the committee now is pretty divided. And as the chair said at the last press conference, people of goodwill can look at the data and reach different conclusions. But I will say that there is risk management on both sides of the mandate now, just not on the labor market.
Okay. When you put your PIMCO hat on and people look at either treasuries right now, by the way, think about equities. Where do you think we are in this cycle, if it's a cycle at all anymore?
Well, obviously, there's a lot of optimism about AI, but more broadly, earnings season, at least based on what I heard on this show and others, earnings season was pretty good across the board. And I think markets have formed a judgment. The Fed is cutting. I think the Fed can cut more if the economy slows. And there's a lot to like about the U.S. economy. Certainly, if you compare the productivity story, even outside of AI to the rest of the world, it's quite favorable.
Rich, when you were at the Fed, did you consider how the market was reacting before you would decide to cut or raise rates? Because if you look at the stock market right now, there's not much of a reason to cut, but this is a bifurcated economy, the haves and the have-nots.
And Becky, part of what's tricky about it, of course, is that markets are forward-looking. And so markets, to some extent, build in what they think the Fed is going to do. So there's an element of that. You know, Ben Bernanke once called it the Hall of Mirrors problem. But yes, as an official, I tried to look through that reflexivity, you know, when I could. That's why I emphasized to Andrew's point, you know, there is a fundamental story here in terms of growth, productivity, and innovation.
Did you argue? Because there's an article today. This is the first time it's ever happened where there's some Fed dissent. Do you think there's more right now than average from what you hear?
I think that historically we have had dissents. During my time at several meetings in 2019, we had 3 dissents, I think, out of 10 votes. And so I think for the most part, that's a healthy part, especially when you're at this point in the cycle.
Yeah. Nobody needs groupthink, rubber stamp.
Absolutely not. And in fact, if anything, a year ago, there were a lot of headlines saying there's too much groupthink at the Fed. They're taking care of that problem now.
Feeling bullish, guys. All right, what do we have here? Big Kev with the only super chat of the stream. Wow. He says, hit the likes. We need the alt season to start. The more you hit the likes, the faster it comes, in my opinion. That's what she said. Overcome. What's happening, man? Splake, Zbeck, XCN, XPR, XDB. Let's go. I wouldn't be trusting any of these government. Yeah, I don't blame you there. Eric, what's going on, man? Luke, buckle up. Here we go. QE has begun. Government open. Interest rates dropping. Liquidity returning. It's time. It's Veda time. All right, guys. So, listen, I have a team developer meeting to get to. Topsy says, Colin talks crypto is thinking BTC top mid 2026. You know what? I would take that. I would love that, actually, because it would buy me more time to stuff my bags, right? I'll take that all day long. Right in time for next summer. Y'all get to go on vacation, right? All right, guys, I got a developer meeting to get to. I will see you guys tomorrow, 1 p.m. Click like if you like this video. Click subscribe if you really liked it. I will see you guys in the next one. Get over to the Patreon, guys. I dropped another trade video over there. Book your coaching calls, whether it's one-on-one, group coaching calls. Check out our courses. They're all free to our Patreon members. Get over there today. The link is down below. I'll see you guys in the next one. God bless.